Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Northrim Bancorp Inc. Annual Report. Northrim Bancorp Inc. offers a wide range of commercial banking products and services to businesses and professional individuals. At the core of its offerings are various types of deposit accounts, including non-interest-bearing checking accounts, interest-bearing time deposits, and certificates of deposit. The company also provides a variety of loan options, such as short and medium-term commercial loans, construction and real estate loans, and consumer loans. In addition to these traditional banking services, Northrim Bancorp offers online and mobile banking capabilities, including mobile app and web banking, mobile deposits, and debit and credit cards. Beyond basic banking services, the company provides a range of specialized products and services, including investment advisory, trust, wealth management, factoring, and mortgage services. These offerings cater to the unique needs of businesses and individuals in Alaska, where Northrim Bancorp is headquartered. Overall, the company's diverse range of services makes it a comprehensive financial solutions provider for its clients. Northrim Bancorp Inc.'s stock price has experienced a significant increase of over 31.72% in the past year due to a combination of positive financial results, strategic corporate actions, and strong operational performance. One key factor contributing to this growth is the company's impressive quarterly earnings reports. In 2025, Northrim Bancorp reported notable increases in net income, driven by higher purchased receivable income from the Salaport Commercial Finance acquisition, increased mortgage banking income, and higher net interest income. The stock price rose significantly following each of these reports, with a notable 6.7% increase after the first quarter report. The strategic acquisition of Salaport Commercial Finance also played a significant role in Northrim's growth. This acquisition provided approximately 15% earnings accretion to Northrim's 2025 operating results and contributed to increased purchased receivable income throughout 2025. Additionally, Northrim Bancorp's decision to implement a 4-for-1 stock split in August 2025 further enhanced the company's stock liquidity and made shares more accessible to a broader base of retail investors. This move was likely a contributing factor to the stock price increase. The company's strong operational performance also contributed to its growth, with Northrim's deposit market share in Alaska increasing to 17.53% as of June 30, 2025, up from 15.66% a year prior. These cumulative positive developments have played a significant role in the appreciation of Northrim Bancorp Inc.'s stock price during the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, mortgage banking income, purchased receivable income, and net interest income after provision for credit losses are significant contributors. Additionally, interest income in community banking and external mortgage banking, income in home mortgage lending also play important roles. In contrast, revenue decline drivers include intersegment revenue in home mortgage lending and net interest income after provision for credit losses in some cases. Industry and market factors, such as economic conditions of Alaska and natural resources industries, can also impact the company's growth and operations. Concentrations of business derived from operations in Alaska are another factor to consider. Segment-specific drivers vary across different segments, with community banking driven by interest income and mortgage banking income, home mortgage lending influenced by origination and sale of mortgage loans, mortgage loan servicing, investment in 1-4 family residential mortgage loans, and external mortgage banking income. Specialty finance is driven by factoring, asset-based lending, and alternative working capital solutions. Employee benefit plans such as profit share expense, employee benefit plans 401(k) contributions and matching expenses, and non-qualified deferred compensation plan DCP also impact revenue growth or decline. Finally, operating activities and investing activities can either provide or use net cash, affecting the company's overall financial performance. The net income of a company has undergone significant changes over the past few years. In 2023, the net income was $25.39 million, but it decreased by 44% from 2024. However, in 2025, there was a substantial increase of 75% from 2023, reaching $64.61 million. This increase can be attributed to a gain on sale by PWA, which was minus $14.5 million in 2024, but zero in 2025, and stock-based compensation, which increased from $0.9 million in 2024 to $1.7 million in 2025. The profit margins of the company's segments have also undergone changes. The community banking segment's net interest margin decreased from 39.1% to 37.3%, while the home mortgage lending segment's net interest margin increased from minus 0.2% to 6.8%. These changes in profit margins may be due to various factors, including changes in market conditions and competition. The increase in total assets from $2.49 million to $2.81 million also suggests that the company has been expanding its operations. However, the exact reasons for these changes are not explicitly stated in the provided information. Further analysis or context would be necessary to fully understand the underlying factors contributing to these changes. The company's financial performance in 2025 indicates a positive trend. The net cash provided by operating activities was substantial, standing at $139.3 million on page 66 of the report. This is further confirmed on page 75, where it is stated that the company generated $1,234,119,000 in net cash from operating activities. The breakdown of operating cash flow across different segments also reveals a positive picture. On page 157, it is mentioned that the consolidated segment reported $113,183,000 in net interest income, while the community banking and home mortgage lending segments recorded $99,828,000 and $24,002,000 respectively. These figures collectively indicate that the company is generating significant operating cash flow, which is a positive sign for its financial health. The company's debt level and interest expenses have undergone significant changes over the past few years. Initially, the total debt increased from $2,774,753 in 2024 to $2,963,729 in 2025, indicating a rise of nearly $190 million. However, when considering outstanding debt, it decreased from $454.1 million in 2024 to $490.6 million in 2025, suggesting a slight decrease. In terms of interest expenses, the company experienced an increase of $2 million in 2025 compared to 2024. Furthermore, total interest expense on interest-bearing liabilities rose from $40,736 in 2024 to $42,769 in 2025, indicating a growth of nearly $2 million. Notably, interest expense decreased by $1,008,000, minus 7.5%, from 2024 to 2025, which is a relatively small decline. However, when examining the data more closely, it becomes apparent that there are discrepancies and inconsistencies in the reported figures. For instance, one page reports an increase of $9,122,000, 76.7%, from 2023 to 2024, while another page shows a decrease of $8.6 million, 16% decrease, from 2024 to 2025. Additionally, there is a notable discrepancy in the interest expense figures reported on pages 157 and 161. In conclusion, the company's debt level and interest expenses have undergone significant changes over the past few years, with some inconsistencies and discrepancies in the reported figures. Management is projecting continued success for the company, driven by growth in loans and deposits, as well as an expansion of market share. The company's community banking division expects to see higher interest income due to increased loan and deposit activity. In addition to its core banking operations, the company is also expanding into new markets through its home mortgage lending division, with a focus on Arizona, Colorado, and the Pacific Northwest. This strategic move is expected to drive growth in mortgage production. The acquisition of SCF has provided the company with a leading position in factoring, asset-based lending, and alternative working capital solutions, further solidifying its presence in the specialty finance industry. Management believes that this expansion will not only drive revenue growth, but also enhance the company's overall competitiveness. To support these business goals, management is committed to maintaining an appropriate level of liquidity while providing a stable source of income through the investment securities portfolio. The company has sufficient sources of liquidity to meet customer demands for cash and operating needs in the foreseeable future. Management's strategy also includes repurchasing stock from time to time, depending on market conditions, as well as maintaining capital ratios that exceed the FDIC's requirements for a well-capitalized classification. Overall, management is optimistic about the company's future growth and expansion into new markets, particularly in the specialty finance industry. The company has a history of paying dividends to its shareholders. According to the provided information, dividend payments have been made in both 2024 and 2025. The amount paid out in 2025 was $167.3 million, while in 2024 it was $150.6 million. This indicates that the company is committed to returning value to its investors through dividend distributions. In addition to paying dividends, the company has also been active in buying back shares. However, this information is not explicitly stated in the provided text. Nevertheless, the fact that the company has paid dividends suggests a strong commitment to shareholder value creation and potentially other forms of capital return, such as share buybacks. Concerns about inventory buildup or supply chain disruption are valid due to ongoing issues affecting global trade. Uncertain tariff policies pose a significant threat, potentially disrupting the smooth flow of goods across borders. Furthermore, disruptions in global supply chains can lead to market volatility, impacting the price of stocks. The uncertainty surrounding tariff policies and the potential for supply chain disruptions raises concerns about inventory buildup. If goods are unable to reach their intended destinations on time, businesses may be left with excess inventory, leading to wasted resources and financial losses. That concludes the financial summary for Northrim Bancorp Inc. Feel free to comment below, and I will be happy to answer them when possible.